And we're on.
Episode 9.
Episode 9. We're almost in double digits. Hey, I thought we'd be there by now. It feels like we've been a little bit lackluster on our frequency.
Yeah, the slackness is on me, mate. Sorry about that.
Well, it's weird though, because typically a lawyer is always to the minute. You know, the schedule is mapped, right?
I'm still trying to figure out who I can build for this podcast.
But that's part of the fun of organizing a podcast when it's not your core focus, right? Like when people are doing this all day, every day, full time. It's frequency, timelines, edits, the whole deal. For us, it's an opportunity to catch up with interesting people that we know and that we meet in the industry and get to know them a little better and share some of the insights that they have, which is fun. So it's a little bit ad hoc, and so be it. That's the way we like it.
Yeah, and no better than poolside at our Queenstown batch.
Yes, the Queenstown batch in full effect. It's nice. I love the flight down, like that's the moment where I feel like, you're leaving Auckland, getting down to Queenstown, enjoying that, preparing for the podcast, and then, back on the plane and back to Auckland immediately after the podcast finishes,
Yep, seeing the mountains.
Yep. Just to fly in, fly out, because, that's how we ball at Blockchain New Zealand with our massive budgets and our unlimited resources.
Our big Bitcoin treasury.
Yeah.
For those who don't know us, I'm Brian Ventura. I'm a lawyer and partner at Hamilton Law, specializing in fintech and crypto. Also deputy chair of Blockchain New Zealand. This handsome fella to my left is Trevor Topfer. He's CEO and co-founder of Avatars Global, and he's also executive director of BlockchainNZ.
And welcome. If it's your first time, hang in there. It gets better, I promise. All right. So something that we identified kind of backstage that I feel like we should just jump into is Blockchain New Zealand is having another event this month. And so this is my chance to plug it. So we're bringing out the big guns, BV. We've got blockchain and fintech. So it's a cross community collaboration. Say that after a few whiskeys. We're calling it the Great Merge, TradFi versus DeFi. So where should I put my money? We're asking the eternally vibrant question of where do I bet my money? This blockchain Bitcoin stuff seems to be doing okay, but everybody tells me it's a scam. My usual habits of being in the traditional finance system aren't working for me anymore. What should I do? So we're gonna jewel it out. It should be fun. We've got some big names coming in. So Peter Dingle, Lenka Kulava, and Rupert Carline are representing Team TradFi. And Alan Crofts from the FMA, Paul Quickenden, and Rachel Gemming are holding the fort down for Team DeFi. And we're going to have a debate, like a proper moderated, topics and everything. And the audience will be able to vote, and it should be a lot of fun. So if you're in Auckland, 25th of November, 5 to 7 p.m., you can see all the details on your screen. You can go to the Blockchain New Zealand website and register. There you go. There's Michelle. I think that's going to be a fun one, though. What do you reckon?
Yeah, it will be. Get the boxing gloves ready.
Yeah.
I'm sure after the debate we'll have a cheeky beer or two. It's going to be a lot of fun.
That might be the follow-up. If it gets feisty, we could set up, the second duel and do it in a boxing ring, and the two communities can put up their best fighters, and we can UFC this thing and see, the UFC has the answer to all of the Earth's great problems, including the complete restructuring of the global financial system. So let's duel it out and handle this the old-fashioned way.
Yeah. And definitely no financial advice. But I think it's good. It's a good debate because we're kind of at an inflection point, right? Like as Jason Titman said at our first episode, our financial system is at an inflection point. Look at the US government. They want to be the crypto capital of the world. They must know something that we don't.
Well, they're making big bets, but they're also, doing interesting things, right? With messing with the global liquidity pool, I'm sure our guest today will probably have a few interesting takes on what's going on in the US. Binu is a man of great distribution. He's in the UK, he's in New Zealand, he's on both sides of the planet. He's always, he's quite a decentralized kind of character, which gives him a unique perspective as to the nuances and the differences and how each kind of different jurisdiction is handling all of this restructuring, this inflection point you're talking about, and what it might mean for little old New Zealand, which is why we've brought him on. So maybe we should get to it and bring on our guest. Ladies and gentlemen, buckle your seatbelts for the one and only Mr. Binu Paul. Welcome, sir. Nice to have you on the show.
Hey, Trevor. Hey, Brian. How are you?
Excited to have you on, mate.
Yes. Unfortunately, Binu didn't have the budget to make it poolside to Queenstown to join us today.
We can confirm it's a real brick wall behind you, Binu.
Yeah.
Yes, absolutely.
Yeah. Us blockchain kind of crypto guys, we like to have something fake. It just makes us feel more complete when there's something fake going on around us. So
there's nothing. It's all there. So.
Fantastic. And Binu, where are you joining us from today? Tell the listeners how we got a hold of you.
Yeah, so I'm currently in London. I typically split my time between New Zealand and London, pretty much half the year at each end. So currently in London, I'm flying out on Sunday morning, but I'm going to be in Singapore for the FinTech Festival, then a week each in Sydney, Melbourne, and I'm back in Auckland late November. Yeah. So, but currently sitting in London.
Amazing. And is it typical London this time of year, starting to get really miserable and horrible, and you're just wishing?
Oh yeah, I mean it gets dark at like 4. Seriously. The only saving grace is, in the lead up to the Christmas season, everyone's got the Christmas to look forward to.
Mm-hmm.
So I think the worst period is the Jan-Feb period, that Christmas is behind you and it's still dark and miserable.
It's still dark.
So that's a bit of a double bender.
It's an interesting contrast, right? You've got Christmas in the summer or Christmas in the winter, depending on where you choose to lay your head. I always loved the idea of Christmas in the winter, but the before and after is not so pleasant. You just want to kind of fly in, enjoy the Christmas in the winter, and then get out again.
Get out.
I have to admit, London puts on a fantastic show for Christmas. Like, amazing.
Mm-hmm.
The city is really, really beautiful.
Yeah, lovely.
Yeah,
very fond memories.
I mean, you have such a diverse and deep fintech background, Binu. We're keen to get an introduction from you for those who don't know you. There may be the odd few who don't know you. You're previously at regulators in New Zealand and the UK. You've also been in the fintech industry for a while. Give us a 2 to 5 minute rundown of your background.
Yeah, I'll keep it reasonably high level, and then we can kind of get into specific areas if you think it's going to be of interest, or if it's going to provide the best context for what we're going to discuss through today. So going back, say, 25 years ago, I pretty much started in financial services. So pretty much all of my career has been financial services broadly, but started off with a very small, short stint in corporate finance, but then went on to spend around 10, 12 years in funds management. Doing various things, including accounting and portfolio management, investment research, asset allocation, what have you. And this latter half of my career has largely been in the kind of confluence of finance and technology. And that's probably from around 2011, 2012. And since then, I've either been working for myself, setting up a number of startups, some spectacular failures, couple of mediocre successes is what I call it. But then I did end up working for 2 regulators. I was head of digital assets at the FCA here in the UK. Prior to that, I helped set up the FinTech and innovation capability within the Financial Markets Authority in New Zealand. So currently I consult for myself, primarily working with payment companies, digital asset businesses, and fund managers. And I try and limit my services to the things I know I do a good job of. And that's either commercialization. And what I mean by that is if there's a business looking to set up in the UK, I can help with starting with, getting them a license, helping them put a team together, capital raise, and that kind of early journey. So it's either that or I'm on the regulatory compliance side where you kind of fallen foul of the regulator and you need help getting out of it. So I kind of stick to those two. I have attached my consulting business, Savvy Kiwi, to a larger organization. It's a professional services firm, which is Manchester-based, called Gunnar Cook. I'm a partner with them. There's no employment relationship there. It is simply a contractual relationship. But what that allows me is the ability to tap into 400 other partners, vast majority of them being legal partners, but a small part of them being people like myself, who comes with very different backgrounds to me, including financial crime, arbitration, disputes, you name it, right? And so when I'm having conversations with my clients and prospects, I can talk about the two things I do, plus the three things I can get everyone else to do for me. So that's where I'm at now. And I think over my career, what I found is, I've been through the journey of having been a founder, worked for corporates, worked for two regulators. And one of my clients right now is a regulator in Africa. And so you kind of get quite a deep understanding of how they think. And you also get a sense of, as a founder, what are some of the challenges when you're trying to build a business. And a lot of people keep thinking about, how does innovation regulation kind of come together? And it's always a loggerheads. I actually don't think it is. The lowest common denominator always is the consumer, right? As a founder, you're always catering for the best experience for your customer. What do the regulators need? They want the best customer outcomes. So we all working towards the same thing, right? So it doesn't actually have to go head on head. It can go together.
Do you see similarities or even polar differences when you look at how those sorts of things are set up? Say New Zealand versus Africa versus the UK, other jurisdictions where you've seen that take place. Do you see common pitfalls and problems? And then
100%, yeah. There's always those angles, and you kind of start figuring out what actually works and what is probably wasted effort. And so one thing I would say is, in most jurisdictions where they've actually got it right, the regulatory or the legislative policy angle is only one leg of two other pillars. So you need three pillars to work together. One is capital, the other one's talent, and the third one is regulation. So if you don't have these three pillars, working well at the same time, you just don't have an ecosystem that's going to enable innovation, right? So legislation and regulation, I see as at only one pillar. And all of these three pillars need an incentive. But unfortunately, capital and talent are jurisdiction agnostic. They can take off. But legislation can't. You're kind of stuck in your jurisdiction, and you got to make good with the best you can, right? But if you don't provide the right incentive for the capital and for the talent, they're not going to hang around.
Yep, I agree.
Do you think that's absolutely agree. We are no strangers to that here in New Zealand. In fact, it seems to be a problem that's scaling right now, if anything. Anecdotally, I'm looking to buy a new car, and every car I've looked at so far, the person's selling it because they're moving to Australia. It's like 5 out of 5 or something crazy. So we definitely have that. But do you think that in all of that, there's the opportunity is building international open legislation that works in all jurisdictions?
Interoperable.
I was going. You got there quick, right?
I always steal your thunder, mate.
So the way I look at it, the simplest way to look at it is this: if this sector is borderless, as in it's jurisdiction agnostic, you would expect that at some level, legislative policy and regulation needs to be borderless as well, or at least needs to work cross borders, because you've got to live where the activity is.
Yeah.
Right.
Or like you say, people just find a way to get around it, right? Like
exactly. And I can talk about some of the risks of not having a framework, because there's both an opportunity cost and a risk of not having this kind of a certain framework. And we can talk in detail about it as we get into the conversation.
Yeah.
Well, I think we're going to get into that with when we get into what we're currently kind of working on in New Zealand, because that's a very topical conversation. I'm just conscious of the fact that I love to start these things, Brian, with our opening question. We're already kind of 10 minutes in or whatever, we're at 15.
My bad. Yeah.
But Binu, I'd love to know. So you came through that sort of traditional finance, regulatory, starting. At what point did you go crypto, blockchain? What is this
Yeah.
all about? And then now you're kind of deeply invested in the space. So we can definitely say you've been red pilled. So what was your red pill moment? What was the moment that you sort of went, okay, I'm in?
Yeah, so casting my mind back, at some stage in my career, I quit a day job in the corporate world, raised a bit of money, and was working on one of my startups. And I was building product at that time. But as a result, it got me out of New Zealand, and I started traveling quite a bit, mostly to US and Singapore. Ended up going to all of these fintech events globally. When I came back to New Zealand in like 2013, 2014, I realized there was nothing happening in that space in New Zealand. Fintech wasn't even kind of part of the vernacular. And so as an experiment, and I'll say it's probably a selfish experiment as well, I had this huge group of network in traditional finance world. And because I was building product, I was working in the technology community as well, I had a massive network there. And I thought, what if I bring the two together, give them an excuse to get together and see what happens? So I put together a one-off event, expecting 40 of my best mates to turn up. That ended up being 255 people on the first year, and that became Finotech. So that was New Zealand's first annual fintech series. So I kept it running for the next 4 to 5 years. And then COVID had other plans. So what happened is in that first year, I actually flew somebody in from Singapore to talk about blockchain, because I'd first heard about this back in 2013, 2014, and I was reviewing the white paper that had just come out 2 or 3 years before. I do have an engineering degree, and while I've not practiced engineering, I'm still curious with new technology trends.
Yeah.
I like to kind of unpack it a little bit and see what the engine looks like, so to say. So this really kind of picked my interest when the white paper came out. So that was always there in the background. And then when I put an event together, I thought, look, let's bring someone in from overseas, and let's get them talking about what they're saying. So that's probably my first kind of contact with the sector. But then I went on in the role as the head of data and monitoring insights at the Financial Markets Authority. It's more in a part-time role. But there I got to see kind of live, a lot of activities that are going on in the sector. And obviously then you start unpacking what those business models look like. And then very, very briefly, I remember I was the regulatory observer on Blockchain New Zealand for literally 6 months. That's when I took off to London. So that was a very, very brief stint.
I was chair at the time, and it was important that you were part of those conversations. Yeah.
Yeah. Because I was chair of the Council of Financial Regulators as well, which I think is such a fantastic initiative. I hope it keeps running. I've had officials here in the UK go, could you create one here in the UK?
Wow.
So look, we've got an opportunity. To your question earlier, Trevor. Yeah, we have an opportunity in the mix of all of this.
Yeah, Trevor and the BlockchainNZ team are doing a lot of hard work with the digital asset working group, and Trevor's going to dive into that at some point today. But in terms of your work with the regulators, where do you see the role of the regulator in those policy discussions? Because the regulator enforces the law, but on the policy side, we're kind of designing the law, we're designing the incentives.
Yeah. So good you made that distinction, because in a lot of the conversations I have, people tend to kind of mix up legislation and regulation. They're two completely different things. So the legislative policy making happens at probably a treasury level in most jurisdictions, like a treasury-like agency level. The regulator is merely an administrator of what that policy looks like, and that translates into rules, guidelines, and best practice and all the rest of it. But typically there's really only three functions within any regulatory agency. First, you're a gatekeeper, which is where your licensing regime comes in. So you create a gate and let the right people into the sector So you know more about who the people involved are, you know more about the entity, you can put some obligations on them. The second level is around monitoring of it. Yes, you've been welcomed into the gate, but you've been given some obligations to be met. Are you meeting them on an annual basis? So that's the second function. And finally, the third function is, let's say you stepped out of line, then how does the regulator enforce those rules on the people who have been let through? So once you think about it in that sense, the licensing part becomes super important, because if you don't have a licensing regime, you actually don't know who to monitor, and you have no ability then to enforce either, because you don't know the entities operating and you don't know the people behind the scenes. So hence why I always think getting the licensing framework proper and early on, I think is super important, because it tells the community what the guardrails are. It builds the confidence in terms of consumers being able to, confidently engage with whatever products and services are being offered. So in that sense, it's actually quite a simple model. Do you have your licensing regime in place? And so, which is why it concerns me, there are a number of jurisdictions who still are taking a bit of a wait and watch approach. And there's almost an inevitability now that traditional finance is increasingly getting intertwined with what we call, blockchain and DeFi and all the rest of it. So it's almost an imperative that you can't wait and watch. You probably need to, go on the front foot on this one.
Yeah, I think
Yeah.
that seems to be being received. I think my experience is the regulatory bodies in New Zealand are very aware of it. The MPs that we've been able to kind of get their attention are very aware of it. I think, if you are in any way, shape, or form engaged in financial markets, you must be aware of it. You'd have to be sleeping under a rock or in complete denial to not be seeing it happen. And so I think that, that we have got that beautiful opportunity for a forward-thinking and engaged, community here. And so you're right. Like, let's take advantage of that and align interests and move quick.
Yeah. One thing I would add to that, though, is again, this comes up often in conversation where a lot of people who are kind of probably new to the sector typically tend to think this is more a clip-on to the legacy systems. It's actually not.
No.
It's actually a fundamental reshift.
Agreed.
Or it's a brand new architecture on how you build trust, how you build transparency, what's the mechanism for value creation. So it's a fundamental rethink that's required. It's not a clip-on to a legacy system. That's the only observation I'll make. So yeah,
I agree. We're using completely different pipes.
That's right.
For this new framework.
Exactly.
What do you think drives that? Do you think it's just, is it too cheap just to say it's lazy regulation? Like, it's just a lazy attitude, like, oh, we already have these structures. I don't want to do the work. I don't want to disrupt the market. I don't want to have to get my consumers to wrap their heads around this new stuff. If we can just shove it into this basket, then we'll carry on.
Yeah, I can give you two perspectives on that, having worked for two regulators and now helping a third one. So every regulator, like every other private company or any other enterprise, works with limited resource, right? And say you've got 10 things to be solved, and it's all 10 are in front of you. What do you do? And you have resource only to solve 3 of them. So what are you going to do? So what you're going to do is going to throw all 10 on a graph, and on one axis you're going to go, what's the likelihood of number 1 happening, number 2 happening, number 3 happening? Then on the other axis you're going to put consequence. What's the consequence of 1 happening, 2 happening, 3 happening? And you get this nice, beautiful graph which stretches from this end to that end. You're going to take the top 3 sitting at that end. High likelihood, high consequence. So a lot of this becomes contextual as to how big a deal it is relative to everything else that's going on. So I think that's an important perspective. So that's one lens to look through. The second lens to look through, I wouldn't call it lazy. I differentiate it as reactive response and proactive response. So you can have reactive regulation or you can have proactive regulation. Reactive regulation is after the fact. You're kind of waiting to see what are the use cases coming in the market. Is this going to be of concern? Is it going to be high likelihood? Is it high consequence? Go back to my earlier point. Proactive is doing horizon scanning, going, here's where this technology is headed. and keep the technology aside, because technology ultimately is just an enabler. But how we provide and how we engage and how consumers are going to engage with financial services is changing because of that enabling technology. So what are we going to put in place? So that's forward looking.
Yeah, and I think the regulators have the unique challenge where, you know, technology companies like we're building in this space, and we're trying our best just to hide all of this, right? We know that that infrastructure is important. We understand that that's where everything's going, so we're building with that in mind. But we've also got to hide it all, or it just becomes a blocker, right? You start getting too technical, and consumers and regulators, we're just people, right? We've got to try and wrap our freaking heads around this stuff and try and understand it. And so
that's right.
You've got the regulators in the position where they have no choice but to have to go down the rabbit hole, in my mind. They've really got to just, you know, bite the bullet, nut up, whatever you want to call it, and actually just do the work. Whereas the technology companies, the service providers, the financial products that are being built around this technology can hide a lot of that, and it just looks very much on the surface like a traditional financial product, right?
Exactly. And so the probably the more recent angle I would add to that is what has become now with the US taking the direction it's taking. It's almost kind of lit the fire under a number of regulators around the globe in terms of keeping up with it. Not even leading, they just want to keep up now, because the US has done a full 180 on it and gone, you know, hell for leather into the sector, right?
Yeah.
And so it's almost become imperative for a lot of regulators not to be able to sit back and wait and watch. I think that time's passed.
There's a fear, and definitely even from me, that New Zealand could get left behind. And you've got this really valuable international experience. You know, you talked about what I call the 4 Cs. You know, capital. There's arguably a shortage of capital in this space in New Zealand, and then, you know, there's also the compliance and the consumer focus. What can New Zealand learn from your travels?
I think it's super important that we have an end goal in mind. I think the risk is that we all end up doing a lot of activity, trying to get to a point without knowing what that point is. So I know this is a bit of a cliched statement, but do we know what 2035 looks like? Or do we know what we want New Zealand to look like in this sector in 2035? You know, the UK actually did a roadmap in 2021 looking at what it looks like in 2030. Now, we could quite easily put something together. But it's a much smaller community, makes us more agile. We can learn from overseas experiences. You know, there's not always a first mover advantage. Sometimes it's okay to be second or third, because you kind of avoid the mistakes that everyone else has made. And so my view would be, let's put a peg sometime in the future, work out what that looks like, and then work our way back from it. And so that's the first step in my mind. That's number one. Number two, I think collaboration with multiple stakeholders is super, super important. And I'll tell you the reason why. Because this new architecture, this new technology, whatever you want to call it, is not a confluence of just one thing. You've got social aspects coming into it. You've got legal. You've got technological. You know, it's got a lot of stakeholders that need to come together. So you need the academicians in there. You need the policymakers. You need the politicians. You need the business founders. And so as a result, if you don't get all of them together in the same room and start talking about what are the opportunities, what are the challenges, you know, how do we get to wherever we want to get to in the next 10 years, the conversations become harder and everything gets fragmented. And so you'll have pockets of people doing different activities, trying to achieve their own goals, but we're missing the big picture there. So I think, you know, apologies, there's an alarm going on outside. Hopefully it's not interrupting it. But you know, you start with a milestone, work your way back. Collaboration is super, super important. And in a smaller jurisdiction like New Zealand, I would say heavily borrow from what's going on internationally. You know, get hooked into those international circles and get the learnings out of it. But at the end of the day, aspiration and isolation is probably not worth much. Execution is everything, right? But you know, but there needs to be planning that goes behind it, and it's about working out what happens in 5 years, what happens in 3 years, what happens in 2, and so what do we need to do next Monday? So I think that's the level of kind of analysis we need to do. The other thing I would say goes back to my likelihood consequence kind of perspective, is it needs to be evidence-based. Why conduct or commit all this time and resource and intellect into it? Do we have the evidence to show that it's going to be worth the money? Is it worth the time? Is it worth the intellect? So a lot of this needs to be evidence-based as well. And so the narrative then becomes simple, and then you get the buy-in from the right stakeholders to commit resource, and that's how you get around to it. But if you don't have everybody in the same room, that's a very, very hard ask.
Yeah.
Yeah,
And
those are good points.
in that vein, was the digital asset working group born, right? Like the whole thing that I feel is New Zealand's biggest opportunity is the fact that we literally can all just get in the room and
100%.
get the
It's their
work done.
advantage.
Yeah, we don't have layers of bureaucracy in New Zealand that slow all of these processes down. And so, the momentum we've been able to kind of gather in a very short period of time. I mean, literally the first piece of government engagement was 3 months ago, and we're now in regular communication. We've got a working group building policy. We've got all the regulators involved and at the table. So that's the beauty of what I see is New Zealand's opportunity. I think in a lot of other jurisdictions, 3 months you'd still be knocking on a door.
Yeah,
100%
to get
agree.
past some kind of gatekeeper. And I laugh and say, only in New Zealand do you get DMs from politicians in your, on your LinkedIn or something, like they share a link that they came across with you or something like that. That sort of is uniquely.
Honestly, I think we take that for granted. It's a very enviable position to be in.
100%. Yeah. So we're running as fast as we can at that while we can. So we know that there's lots of flashing lights, and the flashing lights seem to be scaling and building out more at frequency with AI, kind of the hype cycle of AI and where we're at with all of that. I think we've got a bit of momentum, and we need to move fairly quickly. Not the least of because it's an election year next year, and there's all these other external forces that people forget about. When you sort of, we talk about it and go, you just need to do this and this, but you forget about the bigger picture. And like you say, there's 10 things and you can solve 3. What are the 3 you're solving?
Yeah.
So that's, it's kind of been very, very insightful for me, because it's the first time I've gone through anything like this. And so having that digital asset working group with all of the relevant people, which you've been a huge contributor to already, and I'm sure you'll be contributing a lot more as we get closer and closer to moving this industry, opening the doors, internationally and moving it forward.
So it gets my mind back to the time we were in Queenstown. My thinking was, it goes back to your point about election year and things like that. As a community, if you're looking at community benefits out of this sector, we got to be politically agnostic. And so I think this is important, that we have all the parties involved from day one. And hence the whole idea of creating something similar to an all-party parliamentary group here in the UK. And it's fantastic that because you guys are in New Zealand, you're able to kind of pull it off, right? And so it is still, I think, critical. It doesn't matter who's in power, who's in the regime. The question is the community being served rightfully so?
And not only
are they getting the benefits out of this?
Well, yes, that's our kind of main North Star, right? Like, let's not let the average Kiwi miss this opportunity, because people are going to make generational wealth over the next 5 years, and Kiwi families should be no different to that. That's the real opportunity here, and we kind of talk a lot about it being an export focus. Serving the community here, it's a small country. We're smaller than big cities in other parts of the world, right? And so we've got to be realistic around, what's our focus? If we're just servicing the community here, that's pretty quickly going to happen, I think. It mostly is. I see a huge growth over the next few years. Like I said, we're in that technology adoption curve, right? Like I happen to have it up because we were talking about this just earlier. But yeah, it's interesting to see this is the, you guys have probably seen this one before, but this is your technology adoption curve. And so I kind of feel like, blockchain's in this sort of part of its cycle, right? We've kind of gone through this.
Yeah, we've gone through the pain.
And now we're starting to see this institutional adoption, and this, what we're talking about is the rebuilding or restructuring of the global financial system.
Yeah. And to your point about the North Star, I agree with you both that I think the policy discussion that we're having now in New Zealand, it's twofold, right? It's how do we protect consumers? How do we give consumers choice, which is your point, Binu, and then also Trevor's point, how do we build an export industry out of this? Like our venture capital sector is only 20 years old. New Zealand's got over 10 unicorns now in that short space. And so we've got this awesome opportunity, right? Because we're so nimble.
Well, I kind of have been a little bit of a historian. Not that I've got, like, please don't quiz me because I'll fail abysmally. But just sort of, we talk about New Zealand, or a previous leader of the country talked about New Zealand as being Switzerland of the South, and this sort of idea that a small, wealthy kind of, first world nation has certain opportunities, right? And I see this as a big one, like the, impact that a small country has had on the global financial system when you look at the Switzerland of the North versus what is happening right now, and the opportunity that could be on the table for New Zealand. This could be our moment to take New Zealand from being a small brother of Australia to becoming a global financial, player in the space, because technology doesn't require lots of people. It doesn't require enormous wealth. It just requires some investment, some smart people incentivized to build, and an attitude to do business globally. And we could it could have an enormous impact on our GDP, our employment,
jobs, tax
in the world, like the whole lot, right?
That's what So that's what I call the opportunity cost, the things that fall into the opportunity cost category. But on the flip side, imagine a scenario where most Kiwis end up transacting in US dollar-backed stablecoins, for example. Now, if you don't have a framework which keeps track of who's doing what and in what shape or form and with whom, how do we even know it's a systemic risk? This is just going past you. You don't even know it exists, right? So I think that's the imperative I'm talking about, is that there's almost an inevitability to how quickly things are moving.
Yeah.
And so in 2 years' time, in fact, in 2 to 3 years' time, in fact, I don't think we'll be talking about TradeFi and DeFi.
No, we'll just be talking about
there will be solutions, there'll be problems that need to be solved. And we'll pick and choose what is the best and how the best way to solve it is. So I think that's going to disappear. That distinction is going to disappear in a few years.
I think you're right. I think the conversations are going to change a lot. There's a very big kind of policy and regulation discussion around blockchain in our jurisdiction and in pretty much every jurisdiction around the world right now. It's the topic, but that'll get solved, right? In a year or two, it won't be the topic anymore, and we need to understand. Well, what is, like, I always a person that likes to kind of future state this thing, right? Like, what does it look like in, like you were saying, Binu, 3 years from now? What does it look like for us? 5 years from now, what does it look like for us? Can we extrapolate that? That gets harder to do. It used to be reasonably achievable. You could have a reasonably good forecast, and then this bloody ChatGPT madness happened, and now it's impossible to understand, because it's like you're trying to predict the shifting sands, right? Like the entire landscape around technology is in a bit of a state of flux, and may take a long time to settle. Like AI's, we talked about that curve before. The reason I had it on my screen is because we were talking about where are we in the AI adoption curve, and I think we're at the peak of expectations, and I think we're about to go into the trough of disillusionment.
There's going to be some pain,
huge, pain for AI over the next little period. And that
I'll vouch for that. Yep.
I mean, I'd be keen to hear about, because you travel so much. What are some interesting innovations from your travels that we can learn here in NZ?
Are you looking at kind of specific use cases, or?
Yeah, use cases.
Yeah. So I have to admit, and this is the flip side of this whole argument, is that for many years, I struggled to kind of come across use cases that really compelling. And I think it's probably in the last 12 months that it's become increasingly evident that a lot of the use cases currently are on the infrastructure side of things. As in, as we talked about, it's more shifts in how the rails and the plumbing work, not so much on the things that live on top of the technology. Having said that, I think what I'm seeing globally, there are two main areas that are getting most of the attention. One obviously is in the stablecoin area, the other one's tokenization. So if you think about even BlackRock the other day came out saying they're looking to tokenize their entire ETF range. You're talking trillions of US dollars right away. There's a lot of treasury strategies now cropping up right, left, and center. But more importantly, I think it's the tokenization of real world assets or traditional funds or traditional products, and the whole stablecoin as a payment mechanism that I think is the most compelling in terms of what I'm actually saying. Still, there's a lot of activity going on in the DeFi space, in the pure DeFi space. That's like a quicksand for regulators from a regulatory perspective, right? Because decentralization by its very nature means there's no one entity or there's no one individual that you can kind of hang this on, right? And so that's going to evolve as well in some shape or form. But currently, as I see it, it's the tokenization and the stable coins that, in my mind, are probably the best use cases. And largely because, even back 2-3 years ago, JP Morgan here in the UK was settling around 2 billion pounds of derivatives on a daily basis on a blockchain system. Proprietary, yes, not permissionless, but permissioned. Having said that, that was 2 years ago. And now if I look at Santander and Citigroup and Goldman Sachs, and they're all getting into it. Like, you're talking trillions of dollars. If I look at just traditional global banking, you're talking 200 trillion worth of assets, right? If you look at how much could be kind of converted eventually. I'm not saying all of that I'm not saying that's the addressable universe in any shape or form. I'm not saying that's going to happen next week, but the use cases are happening, and traditional finance is adopting it very, very quickly.
Yeah, I mean,
and that's where the scale is. And that's where the scale is.
You're seeing it in big chunks. We talk quite a lot about it because it's part of our community here. But Stripe moving their entire payment infrastructure onto stablecoin rails, right? So they're now.
Well, think about this. Swift just moved.
Swift they're building on blockchain, like the very
exactly.
We're talking about we're using different plumbing. Even the old pipe
Kodak
manufacturers have jumped over, right? Like, come on,
exactly.
How much do you need to really?
They don't want to be the next Kodak.
This is an example of the imperative I was talking about. There's an inevitability to this. This is happening, right? You can't get away from it.
Yeah. I mean, you talk about BlackRock. We talk about BlackRock and JP Morgan. That's also validation. BlackRock's the biggest asset manager in the world. JP Morgan's the biggest bank in the world. If you don't need any more validation from that, and in terms of we talked about opportunities for New Zealand. There's a risk that Trevor talks about this a lot. We're just playing by other people's rules, so to speak. We're just importing laws. We're just importing all of our innovation instead of building our own. What's one thing, like, for the next 12 months that the Digital Asset Working Group could focus on, do you think, Binu?
Assuming we get all the policy stuff sorted, that's all done and dusted. What's next?
Yeah.
Okay. Oh, that's a big one. So that's assuming all the policies sorted. Well, I'm going to go to the most practical thing, the whole issue around debanking. There's no two ways about it. That's an issue that is front and center. If you're stopped from running a business, doesn't matter how much or how gold-plated your policy is, no one's doing anything with it. So if you tell me that all the policy issues have been sorted, then the first thing would be debanking. And if you wanted a second issue, it'll be digital ID. Because in amongst all of this, Digital ID
You
is
have to
so
have it, don't you?
critical. It's
Yeah.
a foundational
Doesn't work
piece.
without it.
It is.
Yeah.
And so for me, these are the two biggest issues once policy is sorted, or along with policy being sorted, I would say that.
Yeah.
So,
I mean, you know, a good friend of mine, Andy Higgs, runs Digital Identity New Zealand, Blockchain New Zealand. We work very closely with those guys because you're right. I mean, the event that I was talking about earlier is the kind of coming together of these two systems. It's a stretch, but it's fun, right? It's the conversation that we're having. But the real challenge is, how do we get people onto these rails, right? Like, institutions are able to do it because at some point they just off ramp and on ramp. That's an easy thing to do at scale, right? But when you're a consumer, you can't participate at all until you've got through the digital identity piece. And so, yeah, it's a huge problem. And then, you know, if we talk about the lost opportunity, I agree with you that tokenization is probably, stablecoins and tokenization are the two biggest conversations. Tokenization has the stablecoins easy. In my mind, it's just a framework. It's a simple structure. We move on these rails instead of these rails, but otherwise it's just money, and it has a more or less a stable kind of value. But tokenization, it's easy to do technologically. That's not a challenge. We can tokenize anything today. In fact, we could create and launch our own token while talking in probably about 5 to 10 minutes using the freely available services that you can find online. So tokenizing something is very easy. And I'm looking at this going, this is another NFT thing. There's going to be so many things that people tokenize that are going to go to zero, right? Like there's this, everyone's going to tokenize everything because we can. And I say to this quite often is, can you hear my dog barking? Just
he's agreeing, right?
You agree with me, don't you, Brazil? Someone coming in my driveway who can work in the yard, and she's getting all fired up about it. But yeah, I think this tokenization thing is going to be wild, right? Because it's this perfect storm where you've got all of this liquidity flowing into these new markets and these new instruments, and at the same time, all the participants that are trying to take advantage of that are also trying to navigate the digital identity piece and how to set up a wallet and financial sovereignty and custody, and all those things have to happen way faster than they did with the NFTs. With the NFTs, it was just the Reddit chats and the bloody Discords and stuff, and it was kind of happening in these little circles. We're talking about everyone now, right? Like everybody's going to have to go down this rabbit hole in the middle of this kind of barrage I feel that's coming of just tokenized everything, right?
Yeah.
And so the other aspect I would also share is that not all of these new ventures are going to be consumer facing. A lot of these are targeting operational efficiencies in the back end of these large institutions. So remember,
B2B.
it's B2B. So a lot of what's going to happen is not going to be consumer facing. It's not going to be benefits that the consumers actually experience. So for example, right now, if you think about a situation where there's a derivatives trade that you can settle in seconds rather than in 2 to 3 days, you're freeing up that capital that you've put as security
at a much lower fee. So all of the other stuff that comes out of it.
Exactly. And these are creating new benefits, but they're all B2B. It's limited, right?
Yeah. I mean, digital ID. I agree. I think it's definitely a massive undertaking for us that we need to do, and especially in an AI world that we live in, where we don't know what's real now. We're in a post-truth world. Deep fakes, AI, social media influencers. I think also the opportunity with digital identity is it helps really unlock that digital economy.
100%. I call it the foundational aspect, right?
Yeah.
Everything else you're talking about lives on top of that. Now, if you don't have that, you're not letting someone into the ecosystem. That's the front door.
Yeah.
Your digital ID is your front door to come into the ecosystem.
And with tokenization, you and I, Binu, we've been in blockchain during the STO security token period of 2018, and definitely it's kind of tokenization is an evolution of that. And in terms of you mentioned that regulators need to be properly resourced. I see a risk if the Financial Markets Authority, for example, is under-resourced. We could have an explosion of tokenization projects, and there isn't enough bandwidth or resource at the regulator to protect consumers.
Yeah, I agree. I mean, we've got some other very fundamental challenges in New Zealand. So, for example, if I look at custody as a function in amongst the whole spectrum of activities, we don't have any specific regulations around custody, not that I'm aware of. We don't have any specific licensing regime around payments. That's very basic, right? Forget about safeguarding and commingling of client funds and market abuse and competition. Put all that aside. We're talking some foundational stuff, payments and custody. So there's lots of things that need to come together.
Yeah.
And so I agree that there is a risk in that if you don't have a licensing framework, you don't know who are the people coming into the playground. As a result, you can't keep track of where the harm's being conducted.
Exactly.
That's right.
And
because if you can't measure it, you can't manage it.
And we've seen the outcome of that, right? With the FTX crashes and all
FTX.
the billions and trillions of dollars that have
been
wiped off the face of the earth through this
Cryptopia.
The crypto adoption curve that we were talking about, right? The disillusionment phase was pretty brutal, and it lasted a while. So
my view with the FTX, Cryptopia, Dasset, fundamentally those were custody failures, I think.
I mean, there's an element of pure fraud as well in most of them, right? It just happens to be in this sector, but it's the same kind of fraud that existed 20 years ago in the FX markets or 30 years ago in the equities market, right? The usual pump and dump and the rug pulls and all the rest of it. The shop front has changed, but the scam's still the same. That's how I look at it. So.
I actually think, and you might be able to help me understand this, but I suspect that there's also a massive lack of experience in this space, right? So I think that while there's rug pulls and there's pump and dumps and there's definitely bad actors, there's no denying that. If there's money to be made, there's always bad actors. But there's also this complete ignorance. Like there's these kids that are building this technology and launching stuff, and then suddenly it becomes adopted, and they find themselves in these positions where, they're a few years out of high school and they've got millions of dollars flowing into bank accounts and shit. And it's not that uncommon. And you've got no one steering the ship. It's like, floodgates have opened. Let's party. More of this, please. And with no understanding of regulatory frameworks, legal regulations, different jurisdictions, like none of the stuff that's going to protect them and their consumers. It's just, oh, this is working, great, and away we go.
And usually the approach is, ask for forgiveness, not permission, right? That's usually the approach.
That's the DeFi way. You've just defined every degen on the planet there, Binu, in one sentence.
And so one of the risks that emerge from that lack of information or lack of intelligence, because you don't have a licensing framework and because you don't know who's on the playground, is that I call it the policy blind spot. Because you can't create a policy for things you don't know.
Don't even see. Yeah, you're not even aware.
Right? And so in some cases, that's the case. In an extreme case, that becomes policy paralysis. Where do you even start? Because I don't know. And right? So there's a spectrum of kind of where policymakers sit in this. So.
And I think that it's incredibly complicated because it's an infrastructure change that's happening. It's not just a financial product that we've got to figure out how it works. It's a fundamental shift in infrastructure. So all of these different ways of using the infrastructure are different. And the attitude at the moment is, it's blockchain. Let's just throw it all into one basket and treat it as property, right? Like,
I agree. In fact, I would argue that if more and more traditional finance institutions start adopting the new plumbing, the biggest risks from a regulatory perspective would be more on operational resilience, including cybersecurity and all the rest of it. It's not going to be market abuse. Because at the end of the day, I always say this, if you think about financial services, we've been doing the same 4 or 5 things for 5,000 years. We've been either lending money, or we've been helping somebody save money, or we've been protecting somebody's assets, or we've been helping somebody make a payment, exchange of value, or we've been helping somebody hand off assets to the next generation. That's pretty much it. Everything we do today is exactly the same. Nothing has changed.
Yeah.
right? It's only the vehicle that's keep changing because the technology is changing.
Yeah.
So 5,000 years ago in Mesopotamia, they were using bird bones as tokens, exchange of value, right? We just have a digital representation of it today. That's all it is.
That's all it is.
And so
Seashells.
I think the issues are going to be with the enabling vehicle, in this instance being the operational resilience and the cybersecurity. But the things that live on top, the regulators are interested in the activity behind it and the risk that activity causes and how it's being delivered, right?
You know, the activity that goes on behind it. What is the purpose of the token? Like, let's look at something that is reasonably common. Certainly during a hype cycle, it's common where you get an access token into a group, right? Typically, it's a pump and dump scheme. You'll get some kind of access token that gives you access to that group, and then through that group, you're financially incentivized to be engaged and participating in that group, whether it be a pump and dump or legitimate or not. So, is that access token a financial product? Because I have that token with the intention of using it to make money, but the token itself is just an access. It's like a membership card at my gym, right? It just gets me in the door. So these are some of the weird complexities. Like, yes, the exchange of value is changed, although it remains the same. The way we exchange value is different, but now there's also like additional layers being put in between what is value and what isn't. And I think that's a really interesting and unfortunate problem for the FMA and the other regulators to try.
I'll tell you what, it's not an easy job being a policymaker or a regulator. I'll tell you that.
Not legal advice, but that access token, probably we can make it not a financial product, but issuing it in New Zealand, you'd have to comply with the anti-money laundering laws as a reporting entity, and you don't want to KYC everyone. Right, that's a massive barrier.
Especially a group that's trying to do a pump and dump scheme, right? No one's joining that group. Let me know who you are, and then I'll give you the hot alpha.
Yeah. So just on that, this triggered something in my mind. So for the regulators in New Zealand, I would probably think the conversations around know your customer today is actually going to shift to know your model, as and when AI is going to be increasingly used in financial services. So you're going to start doing KYMs, not KYCs.
Yeah, that's really interesting, right? And
KYP, know your protocol.
Yeah.
So it's all in the horizon, and this is what I'm talking about: proactive regulation versus reactive regulation. Or I should say, proactive policy making versus reactive policy making. It's not regulation, so pardon me. But that's the difference between being proactive and reactive. Thinking about what's coming up on the horizon, based on what I'm seeing elsewhere, right? And so, are we prepared for that? Do we have a know your model structure? Do we have a risk assessment for it?
Do we even have the building blocks of a forward-thinking regulatory engine or policy-making engine? It's an interesting question. So, just conscious of time and wanting to get deep into what's driving your thinking. You're in all of these discussions. We talked a little bit about where you see it all heading. What's the big thing that you think our listeners should be aware of with what you're seeing as all of this starts to, we've described this fundamental shift of the financial system. What do you think the average listener to this podcast should be thinking about with what's coming?
I think it's a fundamental shift in how you engage with money and how you engage with value. And I mean, in all aspects, you pretty much need to be taking on more ownership of your finances, and essentially because lots of things are getting disintermediated. And so as a result, the buyer beware kind of theme, if anything, gets only stronger in this instance, because you don't have somebody in the middle intermediating for you or on your behalf. So it all comes with pros and cons. On one hand, you get a far better user experience, but on the flip side, the recourse may be more limited because you don't have somebody in the middle. So it's fundamentally going to kind of shift how you engage with traditional forms of money and value.
Or as Tolkien said, with great power comes great responsibility, right?
Yeah,
exactly.
Yeah, you make a good point, Binu. Like we've seen Sharesies explode in the last 8 years, and what they've really done is grow the DIY market for investing. where before you'd have to go to a broker, you probably need to get some advice before you start making some financial decisions, participating in the stock market. Essentially, Sharesies has allowed the average punter to make their own financial decisions. So, yeah, you make a good point. In terms of your,
Yeah.
sorry, Matt.
Sorry, I'm just going to add one more thing. So I see this developing in like two buckets. So one is everything that's going on behind the scenes that no one's get to see, as in the retail consumer doesn't get to see. And I always say this, I read it in a book sometime many years back. When you're building a product, the best product is something like a light switch. Most people don't need to figure out how it all happens, but everyone walks into a room, flicks it, and expects the light to turn on. And so everything else is in the back end. So there's one bucket of activity that's going to emerge. That's all going to be behind the scenes. There's going to be another bucket where it's all going to be hyper customized with completely disintermediated service where you're engaging directly with whoever is providing you the service. So I think there's going to be two buckets of activities going on hand in hand.
Nice. Well, I think that's a great place to wrap this up. Brian, any final thoughts before we thank Binu for his time, and he can probably go to bed? It's probably 1 o'clock in the morning.
I work at all hours of the day and night, so no, it's all good.
Yeah, I've enjoyed catching up with you again, Binu. We've known each other for a while, particularly when you're at the FMA, and really value your insights, not just from your New Zealand experience, but also from overseas. I'm keen to, maybe for the benefit of the audience as well, keen to hear more about your advisory business. You talked about you solve capital problems, compliance problems. Is there anything else that the audience should take away?
No, not at this point. Look, like I said, I stick to what I know best and where I think I can add the most value. And so it's good to have a kind of a network behind me to reach out if I need the best people in town. So somebody I work with, he's actually written the legislation for around 6 jurisdictions on digital assets.
Maybe we can
and
get
the work and
Copy and paste.
And the regulator I'm working helping out in Africa, I'm helping operationalize one of those. So I'm setting up a brand new department for them for fintech and digital assets. So starting from scratch, setting up all the kind of processes and the risk assessment frameworks and licensing frameworks, enforcement frameworks, and what have you. So, diversity of kind of skill sets that I can bring to bear. That's what I would leave it at that.
It sounds like you're going to come home just at the right time, and we're just going to have a coffee at your place, Control C, Control V, 2 years ahead of the rest of the world. So great. IP's worth a fortune. Thank you, Binu. Really appreciate you giving up your time at this ungodly hour for you to join us on the podcast and share some of your insights. I'm sure people will watch this back and get a real sense of what's happening globally and what the real opportunity is for New Zealand. So I appreciate you putting that all into perspective for us. And Brian, always a pleasure.
Yeah.
Can I leave with a final line? It's something that I always kind of lives rent-free in my head. I read some time ago, when there's a new technology paving a path into the future or road into the future, you can either be driving the road roller or can be part of the road. So
We're still going to be part of the roller, right? So